Hello everyone, I'm Jerry D'Ambrosio and welcome to this week's special presentation. Moving averages are the basis for a number of technical indicators such as MACD, Stochastics, and Bollinger Bands. They offer a really simple and reliable way to identify true price direction and can form the foundation for a complete trading system. Tonight I'm going to teach you a multiple moving average trading system called the EMA squeeze. So some key concepts for the EMA squeeze swing trading strategy. It uses exponential moving averages, and they are preferred if you are a swing trader because they follow price a little more closely so there's less lag. Now with moving averages, there's going to be lag anyway. Moving averages are trend indicators, they're not reversal signals. So with any moving average, whether it's a simple moving average, exponential, or weighted, there is going to be lag. But with an EMA, because more weight is put towards more recent prices in the look-back period of the moving average, there is a little less lag. It hugs price a little more closely. Using the slope of three moving averages after a squeeze, we can confirm if a trend change is taking place and likely or not to continue. Now, of course, we're going to be looking at charts here, so the term squeeze will make more sense here in a moment. After a pullback or a quiet period, the three moving averages, the 5, 8, and the 13-day EMAs, start to rise, squeezing together before pulling apart in an upward trending slope. We're going to use the relative timing indicator as well. It's a very important indicator in this trading system. We want the RT to be rising, hitting higher lows, which reduces the possibility of a false signal using those moving averages. The 50-day moving average is added to the graph to confirm price is above an institutional buying level. And the buy signal, or the entry signal, is generated early in the development of the trend. A sell signal early when the trend is dissipating. The relative timing is falling, the EMAs squeeze together and then separate as they start falling. Now, there are early warning signs before that signal occurs, before the EMAs signal an exit. The early warning signals are earlier as the trend is dissipating, and that's evidenced by the fast and medium EMAs rolling over and squeezing together. When the fast EMA, the 5-day EMA, crosses below both the medium and the slow, that will tell a prudent investor to sell. Again, there are early warning signs, and we'll go over those here coming up. The buy rules are simple. Price needs to be above the 50-day simple moving average. The 5-day EMA has to be greater than the 8-day EMA. The 8-day EMA has to be greater than the 13-day EMA. And the relative timing needs to be trending higher. Really what we're looking for is it to be higher that day, the day that we get our buy signal, than it was 3 days ago. And the sell rules, this is again your last line in the sand. A very prudent exit is to wait for the 5-day EMA to close below both the 8 and the 13. Okay, so here's what it looks like. We'll look at some charts within VectorVest in a moment. But here, you got two charts here, the one at the bottom left. Again, the buy rules are right at the top. So the purple line or the pink line here is a 50-day simple moving average. The green moving average is a 5-day EMA. The red line is the 8-day EMA, and the blue line is the 13-day EMA. So in this case, we had price below the 50-day moving average, steadily falling. And then the stock price starts to bottom out, starts to capitulate here. You could see what happens as price bottoms out and begins to run or rally towards the 50-day moving average. The moving averages here, the three EMAs, begin to squeeze together, essentially at one point or another will all touch. They'll all intersect, and as price continues to rally towards the 50-day, the moving averages will begin to fan apart, to separate. You can see that happening here. It's a very visual system. We want to make sure that we see that separation between those three moving averages. Now, remember, we have to wait until price goes above the 50-day moving average. It closes above the 50-day moving average here. The three moving averages don't have to be above the 50-day moving average. The price of the stock has to be above the 50-day moving average. So on that day, if we just move over to the right-hand chart, on that day, price closes above the 50-day moving average. We see the separation between the three EMAs, and the relative timing indicator trending higher. The entry is the following day on confirmation. We want to make sure that price rises, goes above either the close or the high of the candle that closed above the 50-day moving average. Okay? Really simple system. The sell rules are when the 5-day EMA closes below both the 8 and the 13. You could see that happen here. Now it's well off of the high. Remember, moving averages are lagging indicators. It takes a significant trend change for the moving averages to signal a sell. So here, the 5-day EMA crosses below both the 8 and the 13. This is your last line in the sand. This is your prudent exit. There are opportunities or warning signals before that happens. So in this case here, you can see the moving averages continue to slope upward, right? Price is rising, moving averages are sloping upward, but look at the RT indicator. Price RT divergence is an early warning signal. Relative timing is a very smart indicator. It not only identifies trend, but strength of trend as well. So when you see price rising, you may think, well, price is in an uptrend. It's strengthening. It's in a strengthening uptrend. But we have an indicator with RT that's telling us, in this case, a much different story. Relative timing is sloping downward a little bit. That tells us that truly price is weakening. So that's an early warning signal. Also, the gap in the bands is widening as well. The gaps between both bands begin to widen. The further price moves away from, the 5-day EMA, the 8-day EMA, the 13-day EMA, the likely it is to come back to revert towards it. So the further price gets away from those moving averages, the wider the separation, particularly when we see that RT price divergence. That's another early warning signal. Warning signal number 3 is when the 5 and 8-day EMAs are squeezing together, right in this area here. That gives you another early warning signal. Now, I've seen trades where that's happened, but the 5 never closes below both the 8 and the 13, and the stock continues to run higher. So you have to decide which exit is really best for you. Once you get familiar with this system, I think you can maybe look at some of these early warning signals and then take action. To keep it simple though, for now, we're just going to use the sell criteria of the 5-day EMA closing below both the 8 and the 13. But I wanted to give you guys some early warning signals so that you can prepare to exit maybe a little sooner. So let's hop into the program. Let me look at some charts here. We're looking at new core, NUE. So let me lay out the chart here. The bottom indicator is the relative timing. The green indicator is the 50-day moving average. The orange line is the 5-day EMA. The red line is the 8-day EMA. The blue line is the 13-day EMA. And you can see the legend over here on the right-hand side. So I'm going to create a date line. So I'm going to take off price for now. We don't really need price on for now. So back here in February of this year, you could see the 3 moving averages were below the 50-day moving average. And then what happened? They began to squeeze together below the 50-day simple moving average. Put price on. Price rallied, bottomed out here the end of January, rallied towards the 50-day moving average. As that happened, the bands squeezed together. They began to separate. So what we look for is price to close above the 50-day moving average, and that happened here on February 9th. However, I would argue that we didn't quite see the separation or the fanning of those 3 moving averages till about here. I would even argue if we even waited another day. You want to really make sure that this trend is going to continue, and the separation and the fanning of those moving averages gives us that edge. So it's a trend trading system. I'm okay with getting in maybe a day or so later, just to make sure that the trend is likely to continue. The moving averages are separating. So on February 12th, I think that would have been a very, very good opportunity here to take this trade. Now, I wouldn't take it on February 12th. I'm waiting for the stock to close. I can see that it closed above the 50-day moving average. The moving averages are fanning apart, really clear on that day. The relative timing indicator rising, very, very important. higher than it was 3 days ago. You can see it's trending up. So my entry is the following day. I either wait for the stock price to go above 56.34 or 56.43, just depending on your level of aggressiveness. I don't mind waiting or entering as price moves higher than the previous day's close. Again, that is up to you, but you just want to make sure there's confirmation. You want to make sure that the stock is going up the next day before taking the trade, and it did. Stock went up the next day. We're in the trade. Okay, so those are the buy rules, and we're going to go through a couple of more charts here, but those are the buy rules. Let's talk about the sell rule, and we're going to stick with the 5-day EMA closing below both the 8 and the 13. Okay, so let's move forward. I'm going to take price off because really here you don't need price. The 5-day EMA stays above the 8 stays above the 13. We're still in the trade. A little convergence there at the beginning of March, but the 5 never closed below the 8 nor the 13. So we'll move forward. We're going to stay in the trade. Looking at the hard right edge there. The 5 is converging towards the 8. Again, maybe a little early warning signal. Let's put price on. See a little divergence here as well, don't we? Price is rising. Little divergence. The RT is sloping downward a little bit. Let's continue to move forward. But the stock continued to run. Stock continued to run. 5 never closed below the 8 nor the 13. Stock continued to run. Moving averages are still where we want them to be. Little softening I see as of the hard right edge there. Little softening of the moving averages. The 5 has officially now converged and touched the 8. Looks like we might be getting a sell signal here. You can see the moving averages start to slope downward. And looks like right there, the 5 closed below both the 8 and the 13. Now that's at a price of about 76 bucks. Where did we enter? We entered a little bit above 56, right? Let's say $57, $56.70 or so, right between $56.34, let's say $57. That's a nice gain there in a couple of months. It allowed us, using these moving averages, it allowed us to stay in this trend. There were some bumps in the road along the way, but not enough to cause the sell signal where the 5 closes below both the 8 and the 13. So let's talk about our exit now, because on April 22nd, we could see that the 5-period EMA closed below both the 8 and the 13. The stock price closed at 76.09. We wait for follow-through the next day. We never got it. The stock price went up the next day, so we're going to stay in the trade. We're going to stay in the trade. It allowed us to stay in. So just as waiting for confirmation is important when you're buying, waiting for follow-through and confirmation the next day is as important. You got your sell signal on April 22nd. As of the close, you don't have to watch the stock all day long. If at the end of the day you see that the 5-day EMA closes below both the 8 and the 13, again, you see that at the close, you get prepared to exit the trade the next day. You didn't exit the trade the next day. You didn't need to because price did not continue to fall. So what happens? Waiting for that follow-through confirmation after your sell signal allowed us to stay in. Allowed us to stay in the trade. All the way through March. Looks like we might be getting another sell signal here. We didn't. The stock continues to run, guys. It allowed us to stay in this trade all the way to June 15th. Look at that relative timing indicator, by the way. Let me put price on. Okay? Look at that relative timing indicator. It's really starting to drop sharply. So here on June 15th, the 5 closes below both the 8 and the 13. It closes at 101.92. And then we exit the trade the following day. You can see weakness. The stock price not only moved past the close of the 15th, it went below the low of the 15th. And that is where we exit the position. Okay, I'm going to step us through. I'm going to keep moving us forward because what we are then looking for maybe is another re-entry. Let's see if we get it. The price of the stock now crosses below the 50-day moving average. Okay, let me take off price. The 3 moving averages are now below the 50. The 5 is below the 8 is below the 13. Started to see a little bit of the squeeze there at the end of June, beginning of July. Let me take off my date line. We're looking at the hard right edge here, guys, as I step through. There we go. We see the squeeze now at the end of July, don't we? Price settles down, capitulates, the stock price starts to rise, heads towards the 50-day moving average. Let's keep an eye on the moving averages, though. They squeezed. Now they begin to fan apart. Here's an opportunity for another re-entry. I would argue that right there, let's go back a day. Now I really see it on July 29th where the moving averages begin to fan apart. Price closes above the 50-day moving average on that day. Relative timing is rising. We enter the following day on confirmation. Now, the stock's price didn't open above our confirmation level, but it did rise above our confirmation level the following day. And, just to fast forward, we're still in this trade. This is the hard right edge. This is the most recent data as of the close of Thursday the 12th. The 5-day EMA stayed above the 8, stayed above the 13. Price continued to run, so we're still in this trade. Good winner here. At least a 20%er already. Because if we enter in at about 104, as you can see, it's at 125 now. Okay, let's look at Gnrc. We'll go through the buy rules again. I'll take off price. Here, at the end of May, the EMAs were below the 50-day moving average, right? They began to squeeze together. They began to separate in this area here. I would really argue that on May 28th there, as relative timing begins to really pick up momentum, it crosses above 1. Right there on May 28th, the moving averages are starting to fan apart. Okay? Put price on. We closed at 328.72. We hit a high of that day of 330.89. We did go above both of those prices the following day, so there could have been an entry on that day. Okay? If the open and the high, and I've seen this before, are so close to 9:30 a.m. Eastern Time, then there's really no opportunity to take the trade on that day. I've seen that a number of times. We want to wait till 9:45, 10 o'clock in the morning before we take the trade. So at 9:45 and 10 o'clock, it's hard to say because I don't have intraday data here. Where was price at 9:45, 10 o'clock? I would argue it was probably below our confirmation levels. So then we have to wait a couple of more days. Okay, we wait a couple of more days, and then we finally get into the trade as the stock price really starts to pick up momentum. Okay, let's take off price. Let's see where we would have exited here. Look at those 3 moving averages. Beautiful trend, not much weakness there, smooth sloping upward. Continue to run. All right, so now as of the hard right edge here, the 5 is converging towards the 8. Looks like they've touched. The 5 never closes below either the 8 or the 13. Looks like we got our exit right here. 5-period moving average closes below both the 8 and the 13. Relative timing sloping downward. Let me put price back on. Little divergence here as well. See a little downward slope of the relative timing indicator as price moved sideways. I would argue it moved sideways, didn't really rise. But the indicator, with price moving sideways, the indicator sloped downward a little bit. You can kind of see that there. Okay, so we exit, or we got our exit signal on July 29th, right? That was the day that the 5-period moving average closed below both the 8 and the 13. We never got follow through the next day. And there was our follow through. Okay, now this different situation here, right? With NUE, when we got our sell signal, price of the stock rose not only the next day, but continued to run higher, allowing us to stay in the trade. That wasn't the case here. Price went up the next day, but did eventually move lower than our confirmation sell level that was given on July 29th. Fast forward to today. What are we seeing now? Maybe seeing another entry. Now, the price in this case, the price of the stock never fell below the 50. It doesn't have to fall below the 50 for the system to generate another signal. In this case, price stayed above the 50. 50 served as really nice support too just a few weeks ago. Stock price stopped falling, began to rise, pulling away from the 50-day moving average. Again, it stayed above the 50, which is fine. The moving averages are now squeezing together. So let's put this stock in a watch list. Let's see what happens next week. Because I don't see the fanning yet, but I do see the squeeze as of the hard right edge. Okay? If price continues to run and pull away from the 50-day moving average, we're going to see that fanning action of those three moving averages. Relative timing is trending higher, which is good as well. But this is a nice watch list stock for next week or even after to see if this trend continues. It's a great looking stock, right? If I go to a 1-year chart, it's a great looking stock. Looks like the 50-day moving average a number of times has served as really nice support for this stock. All right, folks, so I love this system. Very simple, very visual. It's called the EMA Squeeze Swing Trading Strategy. Now, if you want to learn more, I urge you to stick around for a few more minutes because I want to talk to you guys about a new course that we're offering called Mastering Moving Averages. This is a full, complete course on trading different types of moving average techniques. Once you register and you go to that website at the bottom, www.vectorvest.com/MA, you'll get immediate access to all the training modules. We go through the VectorVest system, understanding moving averages, trading with a single moving average, trading crossovers, using moving averages as support and resistance. We'll go through, again, the complete EMA squeeze swing trading strategy, and we'll also go through the short side as well, the bearish setup. Another system called the Guppy trading system using multiple moving averages. Dr. Barbara Starr, she is a consultant, a technical analysis consultant with VectorVest. She's an author. She's written a lot of articles for Stocks and Commodities magazines. She's developed a system using Bollinger Bands called Surfing the Reversal Waves. We're going to teach you guys more about the Midas Touch because now it can be either a swing, short-term timing system or even a longer-term model as well. And then a bonus trading system called Trading High-Low Moving Average Bands. Here are some special bonus offers. We're going to do 6 live mastery support sessions. They begin on September 1st. Now the modules, once you get in there and get into the university, everything's been pre-recorded. You'll notice that the modules are there and also the old mastery sessions that Stan Heller and I did a few months back. Those are in there now. The ones that we do starting on September 1st will replace the old ones, and that's how you'll continue to get new content as we deliver new courses. We're always going to upload the more recent content. For you current subscribers, you're going to get access for 60 days to the VectorVest Premium Real-Time Program if you don't already have it, and that includes Pro Trader for technical searches and the Auto Timer, which is the portfolio and backtester tool. And Pro Trader is a very important tool in this course. You'll get full access for 60 days beginning on August 14th. They include moving average crossovers, which of course we're going to use a lot in this course. Now we're going to be giving you folks searches. They're not going to be inserted into your programs, but we have included screenshots of the search parameters in the university, and Stan has been kind enough to record some little mini videos on how to build those scans. Very, very important. We don't want to cherry pick through the entire database to find some of these, so we're going to use these scans to get us most of the way there. Okay? 10 full lessons. We're going to be doing 6 live mastery support sessions, but we have 10 lessons included in this course. Now, sometimes we're going to bunch a few lessons together and review those lessons in one mastery session. But there'll be 6 mastery support sessions, 10 lessons, 1 bonus session, case studies and homework assignments included with every lesson. And this is an email that Warren G., a former student of our Mastering Moving Averages course, sent to Stan Heller not too long after the course was over. He said, after taking the MMA course, I am now able to better determine entry and exit points. My win-loss ratio following my old plan resulted in 51% wins with very little monetary gains. If I would have followed the 20-day moving average strategy, I would have had 75% winners and produced my largest portfolio gain. Using the EMA squeeze, I would have netted me 84% winners with the second largest gain, and the golden crossover would have resulted in 64% winning trades and the smallest of the 3 portfolio gains. I would have gladly taken half of the portfolio gains in any of these 3 strategies. So folks, on behalf of Stan Heller, who by the way is our VectorVest Canada consultant, we look forward to working with you. The $3.95 rate is still available. It is the early bird rate. Go to www.vectorvest.com/MA to register. If you have any questions, give our support department a call or email Stan and I. We'd be more than happy to answer any questions that you guys have regarding the course. I hope you guys enjoyed tonight's presentation. Have a great weekend, everybody.